Hello, everybody, and welcome to the latest edition of the Sharesify podcast. I'm James Crux, and I'm joined by my regular sparring partners, Ian Conway and Stephen Frazer. Hi, chaps.
Hello, gents.
Hello, James.
Right, so looking at the screen, we've got the FTSE's flat on the week at just below 10,300. The S&P 500, its worst day of the week yesterday, so that leaves it down around 1% on the week. The Nasdaq was up on the week, but yesterday it had a bit of a bad day, so it's down 0.5%. But Ian, you've got some observations on the S&P 500, haven't you?
Yeah, interesting, James. So as you say, it had a poor day yesterday, finished at 66.72. Normally, we don't pay much attention to index levels per se. They always say the trend is your friend, but because we've had a couple of weeks now of weakness, everybody's looking at the 200-day moving average, which is at 6,600. It's only 70 odd points below here. It's about the level that the US market bottomed in October and December last year. But also there's this sort of idea that, nothing good happens below the 200 DMA. It's a phrase that one of the old hedge fund managers, Paul Tudor Jones, used to say, because he used the 200 DMA, which is the long-term support. It's the 200-day moving average. And it's the long-term support for the market, and he would use that as a kind of, right, I need to ditch this stock if it goes below it, and everybody therefore is kind of looking at this 6,600 level on S&P. Quite interesting. See where we go. What's grabbed you, Steve?
I find it interesting that we're having such a volatile week, and I wonder if it's got anything to do with the fact that today is Friday the 13th.
Oh, yeah.
So I don't know about the technical analysis side of things. I used to work with a technical analyst many years ago, and I found it all a bit mind blowing, to be honest. But there you go. I mean, it's been really strong results this week as well. I mean, it's easy to get caught up, I think, in the background noise, and sometimes miss out on actually companies that are actually doing really well.
True.
I think there's been some really big question marks over Oracle, for example, but I mean, ultimately their results were really, really strong. They've still got questions to answer about, the massive debt that they're going to be carrying, and how they deal with that. So, their challenges are far from over. And also, I know Adobe today, which has been in the doldrums for well over a year now. And it's just one of these classic software companies that the market is basically saying, we don't know if your business is going to find this an opportunity or a threat. And ultimately, as the market tends to do, as we all know, the market tends to react first to the negative and then worry about, the detail later. So it's been absolutely battered. Year to date, it's down a good old stretch, about 25% or something, and it's down significantly, 65%, I think, from its 2021 highs. P 11 now, so that gives you some kind of context about where this software company is going. But Q1 results were very strong. Q2 guidance was well above market targets. But the big question, of course, is a CEO of 18 years has decided to do a runner. So that's another level of uncertainty to an already fairly uncertain market.
Yeah, I was looking at Bridgepoint. Now, that's a private equity and private credit, and now that's one where the jury's out, and there's been a lot of scary talk about private credit and so on. And in fairness, it hasn't been a great investment because a lot of people are leery of it. But put in a really good performance last year. Fees were up, assets under management were up. They also pulled off what they reckon is the biggest private equity sale in history, when they sold Calpine to Constellation Energy for $33 billion in stock. They say the fees are going to go up again this year, but that to me is kind of the standard. There were a few ropey ones, weren't there, James? On the beach?
Yeah, two other stocks where the jury's very much out. So your two travel-related stocks, I guess. On the beach, they suspended guidance on a slowdown in bookings, sort of the knock-on effect of this Middle East conflict. So demand has slowed for Turkey, Greece, Cyprus, and Egypt. And then we had Trainline, inline trading update, but there's a lot of uncertainty around this Great British Railways tender process, and also the CEO is in the departure lounge, so a bit of uncertainty at the top.
Oh, another one.
Yeah, indeed.
The train has left the station.
Yeah,
indeed. Can it get back on track? I don't know.
I'd add to that Barclay Group today. Now, maybe I'm being hypercritical, and as you know, I'm not a huge fan of the house builders, or in this case, apartment builders. But it looked to me like a very subtle cut to 2027, financial year 27 pre-tax profit guidance. They said it would be a similar level to FY26, which ends in this April. Well, they confirmed that would be 450 million. If that's a similar level in FY27, i.e. it's not growing, that's below the consensus. So they also didn't mention anything about share buybacks. What they did say was that from financial year 2027 onwards, I guess March 2028, April 2028, they would focus on maintaining the balance sheet. And one of the big supports for this sector has been share buybacks, as we know. You only have to look at the companies that have cut them and see what's happened to their share prices. So, maybe I'm being hypercritical, as I say. It's just that to me looked like a bit of a disappointment. And Sunbelt Rentals, the old Ashtead, remember that? Ashtead?
Yeah.
Moved its listing to the US, now reports as a 10Q. Oh my God, it is horrible to have to try and decipher a 10Q.
They are actually jumble, aren't they?
Oh, well, anyway, bottom line is down 11% in Q3 to January because the rental market's soggy and costs are going up, and some of those costs are kind of self-inflicted. Profit sharing and stock-based compensation. So, I don't think shareholders are going to be that impressed when that opens later on today, because of course it's quoted in New York now, so we don't know what's going to happen until this afternoon. What about next week, James? What have you got lined up?
Yeah, we've got another Ashtead, haven't we, next week? And we put a little preview note out on the Sharesify site. We've got Ashtead, which is this subsea services firm reporting. Also, we've got online review site Trustpilot, and I'll also be keeping an eye on home improvement retailer Wix to see if that's managed to eke out more market share gains in a tough market for big ticket spending. What about you, Ian? What you got your eye on?
I mean, apart from Ashtead Technology, as you say, I'm looking at Standard Life, which is used to be Phoenix Group. So for anybody who owns that and wonders where the quote has gone, it's no longer PHNX, it's SDLF for Standard Life. I think quite sensibly they changed the name because everybody knows Standard Life. They are reporting on Monday. Very popular with income investors, this one. Like Legal and General. Now, full disclosure, I own both of these. I'm just hoping the market reaction to Standard Life is better than it is to Legal and General, because that thing got walloped about 5 or 6%. Didn't look to be anything wrong with the numbers, but the market just, I think, zeroed in on the solvency ratio, which I didn't really see there was a big issue with that. All the numbers actually looked pretty good, but that's my look at. That's what I'm looking at. What about you, Steve?
Yeah, I mean, just something I think listeners might find interesting is coming after the market closes in New York on Tuesday, which is Lululemon. Now, James knows more about the company than I do, but this to refresh everyone's memory, this is the very fashionable kind of athletics and gym and aerobics kind of equipment and kit supplier, and it always struck me as very bizarre how they seem to be able to sell certain individuals this really expensive athleisure wear. Is that what you'd call it, James? I'm not quite sure, but it's been taken to task by investors over recent years. So I just think it'd be interesting to see what they're saying about the retail market, what they're saying in general about spending in the US.
Absolutely, yeah. And I think the founder, Chip Wilson, has been unhappy with the direction of the business, so that would definitely be one to keep an eye on.
Could be another one to be perhaps taken private again. Something
maybe, yeah. I mean, that was a real market darling years ago, wasn't it? And as you say,
really
Steve, they charge a lot of money for the gear.
This is what makes you wonder. So, I mean, how to what extent can supposedly premium stuff justify the premium price tag? When there's so many options. You can go and buy a leotard in Decathlon for, I don't know, 20 quid or something. So what's the message? It's obviously a different market you're aiming at, but is that market expandable? And that's the big question always. And the other big interesting company would be after the market closes on Wednesday, which is Micron Technology. Now, we've talked before on these podcasts about memory pricing of chips. It's a really hot topic at the moment. Pricing is going massive demand, data center expansion, etc. Samsung, SK Hynix, both in Korea, they're been the real winners, certainly so far this year. Micron is a really stable, solid part of that broader landscape, though. So it'd be really interesting to see what they're saying about these costs and the supply chain and what they're seeing down the line. So I'll certainly keep my eyes peeled on Wednesday evening.
Right, marvellous. Well, we can wrap it up there, I guess, guys. If you've enjoyed this podcast, please do like and subscribe on your favourite podcast channel or on YouTube. As always, if you're a company, a fund or a trust and you'd like to come on the podcast and chat to us, this week we had Emma Bird from Winterflood, so have a look at that. Then just get in touch with us at editorial@sharesify.com. And we've got another special guest coming up next week, but you'll have to wait for that until next week. Thanks very much for watching. Cheers.
Cheers.